If you have ever found yourself staring at your bank account balance a few days before payday and realized you are short on cash for groceries, gas, or an unexpected bill, you have probably looked into cash advance apps. Among the most popular options available today is Cleo, an AI-powered financial assistant that promises to spot you cash when you are running low. But when you are facing a financial crunch, the single most critical question on your mind is, how much can you actually borrow from Cleo? The short answer is that Cleo offers cash advances ranging from $20 up to $250 for most standard users. However, if you're expecting to download the app and immediately walk away with $250 in your bank account, you need to understand how the system actually works behind the scenes. The maximum amount you can borrow is not a guaranteed figure given to everyone. Rather, it is a dynamic limit that depends heavily on your financial habits, income frequency, and history with the app. For first-time users, the starting borrowing limit is typically much lower, usually between $20 and $70. Cleo takes this conservative approach because it needs time to analyze your connected bank account. Unlike traditional lenders, Cleo does not perform a hard or soft credit check. Instead, its algorithm evaluates your cash flow. It looks at whether you receive consistent recurring deposits, how often your account balance dips near zero, and whether you frequently incur overdraft fees. If the AI sees a steady income stream and healthy spending habits, your initial approved amount will lean toward the higher end of that starting bracket. Over time, as you request advances and repay them on your scheduled dates, your limit can gradually increase up to $250, or in select tier programs with boosts, slightly higher. However, many users encounter significant fear and frustration around how these borrowing limits fluctuate. A very common fear among app users is paying back in advance on time, expecting to immediately borrow the same amount or more, only to find that their available limit suddenly dropped to $20 or disappeared entirely. This happens because Cleo recalculates your eligibility continuously. If your latest paycheck was slightly smaller, if an automated bill payment lowered your average daily balance, or if a regular deposit came in a day late, the algorithm automatically lowers your risk threshold. Understanding this prevents the panic of relying on an advance that might not be there when you need it most. Another critical aspect to keep in mind is the real cost of borrowing from Cleo. While Cleo advertises 0% interest and no late fees, accessing the cash advance feature is generally tied to their paid subscription service, Cleo Plus, which costs $5.99 per month, or the Cleo Builder tier. Furthermore, if you need the funds transferred to your bank account instantly rather than waiting 3 to 4 business days, you will have to pay an express transfer fee, which varies depending on the advance amount. When you combine the monthly subscription cost with express payout fees on a small $30 or $50 advance, the effective annual percentage rate can actually end up quite high. So how can you practically maximize your borrowing potential with Cleo if you choose to use it? The most important actionable takeaway is account optimization. Make sure you link the primary bank account where your main payroll or income is deposited. Avoid connecting secondary or rarely used accounts, as sparse activity will result in lower limits or outright denial. Second, maintain a predictable pattern of direct deposits. Cleo rewards consistency over raw income size. A steady $500 weekly deposit often yields better borrowing limits than sporadic, irregular $1,500 transfers. Third, never rely on Cleo as a primary emergency fund. Treat cash advances purely as a short-term bridge for genuine micro-emergencies, and use Cleo's built-in budgeting tools, autosave features, and spending breakdown insights to gradually build a personal cushion of cash. This prevents you from falling into a cycle where every paycheck goes toward repaying the previous week's advance. By understanding the exact rules, fees, and algorithmic criteria, you can make Cleo work for your wallet without falling into unexpected financial traps.